Today, Binance's U.S. arm launches high-yield staking of Solana, Avalanche, and more. Human rights advocates say crypto remains essential for countries with collapsing currencies, and New York State releases new rules for stablecoin issuers. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are moving higher this morning. By noon Eastern, Bitcoin jumped back above the $30,000 level. Ether traded at around $1,800, and Solana was trading at around $39. Let's jump to the top stories. First, Binance's U.S. business just added high-yield staking services for a handful of proof-of-stake cryptocurrencies. Users holding tokens like Binance Coin, Solana, and Avalanche can lock up their coins and earn yield. The exchange does charge a commission for handling the staking process, though. Now, Binance is competing with the likes of Coinbase and Gemini, who also offer staking services in the U.S. Next, human rights advocates around the world wrote a letter to Congress defending crypto. More than 20 advocates wrote a rebuttal to a letter from technologists last week, urging lawmakers to take a more skeptical approach to the industry. Now, in this rebuttal, human rights supporters said crypto can be an essential tool in countries where a currency is collapsing or cut off from the rest of the world. They also said Bitcoin's open and permissionless design helps foster financial inclusion. Finally, New York State just released new rules for licensed stablecoin issuers. The Department of Financial Services expects stablecoins to be fully backed by a reserve of assets and redeemable by investors. The agency also says issuers should submit to monthly audits by independent accountants. The guidance affects current holders of the BIT license, the business license for virtual currency businesses operating in New York State. For our main story today, Crypto World's Tanea McKeel spoke to Adrienne Harris, superintendent of the New York State Financial Services Department. They talked about the new guidelines and criticism from the crypto industry over the state's BIT license.
What are some of the key points in this guidance that issuers need to know about?
Yeah, thank you so much for having me. We did just issue this guidance. It relates to our current licensees, either BIT licensees or limited purpose trust charter holders that are issuing stablecoins backed by fiat currency. And it touches on a number of important issues, including reserving requirements and the types of assets that we expect these entities to have in reserve, liquidity and redemption. So we expect them to be able to give consumers back their fiat currency when they redeem their stablecoins. And it lays out a number of audit requirements by third parties and internal audits that we have for our licensees as well.
You said this relates to your licensees. What does this mean for anyone trying to obtain a BIT license? How strict is this?
Yeah, so it means that they will be expected upon obtaining a BIT license or a limited purpose trust charter from DFS, and they are going to be issuing stablecoins, that they will be expected to meet the requirements of this guidance as well upon being licensed. And I think it's important for viewers to understand we have our licensing requirements, which are incredibly rigorous and speak to Bank Secrecy Act and anti-money laundering requirements, cybersecurity requirements, and a number of consumer protections. And then we have those rules that apply to those companies when they are licensed. And so that means additional requirements that are often represented in individual supervisory agreements. That enables us to speak to bespoke risk represented by each company. But now with this guidance, we are making clear to the universe of our licensed entities that which has been made clear in individual supervisory agreements, but we're now making it transparent and making clear to the marketplace that these are our expectations for our stablecoin issuers across the board.
So zooming out a little bit, I'm just wondering what your general outlook is on stablecoins, because the market, it moves so quickly and so fast. And we've seen iterations of stablecoins come and then go and then come back, and people try to retry them. And clearly it has got a firmer hold on the market, as evidenced, I think, by the DFS taking such a close look at it. But just in general, how do you see, I guess, the culture of crypto and of stablecoins' role in the financial system and in just business and e-commerce more broadly?
Yeah. DFS has been regulating the space for a long time, but it's a fast evolving and fast moving space, as you indicate. So it's incumbent upon us as a prudential regulator to make sure we are keeping pace with the innovation in that space, whether it's stablecoins, cryptocurrencies, other types of digital assets. So this isn't the last you'll hear from DFS around the space of digital assets. And to that point, we have an internal initiative that I launched when I came in as superintendent that we refer to as the VOLT initiative, which stands for Vision, Operations, Leadership, and Technology. On vision, we continue to be the main prudential regulator for this space. While Washington and the federal regulators are working through their views here, we've been regulating this space for several years. Operationally, we are making our systems and our processes run more smoothly so that we can keep pace with the space as it continues to evolve and move. With leadership, we've brought on great new people into the agency, and we continue to hire at a rapid pace, so we have the resources and the expertise we need to regulate and supervise the space appropriately. And on technology, we're using our own technology, and we're using blockchain analytics, among other things, to make sure that we can supervise the space appropriately as well. So there's a lot of work to be done. It's a fast-moving space, but I think DFS and other regulators are doing a lot to keep pace.
The crypto industry has sort of famously been very critical and hostile towards this BIT license. What are some aspects of the BIT license that you feel have room for reform? And what are some of the stricter things that are currently in place that you think still belong?
Yeah, so it's important to understand we have both the BIT license and the limited purpose trust charter through which we regulate virtual currency companies. And as I said before, in fact, we see that having those clear rules of the road has attracted companies to New York. We currently have over 30 licensees in New York State that have either a BIT license or a limited purpose trust charter, and we have a long queue of licensee applications as well. And I will say, prior to my tenure, the system was a little gummed up. It took too long to get a BIT license or a limited purpose trust charter, and that's a legitimate complaint that industry has had. But what you don't hear them complaining about is the substance of the regulation itself, because they really do value that transparency and that clarity. So under our VOLT initiative that I started when I came in as superintendent, we're doing so much to make sure that the system moves faster and better and that people aren't waiting in queue for years and years and years, but we can do that without sacrificing the regulatory rigor that this space really demands.
And you sort of touched on this just now, but something else that a lot of people within crypto talk about a lot is this exodus of talent that they see leaving New York because of how strict the BIT license is. Do you see that as a concern?
No, actually, to the contrary, we see more and more companies coming to New York. We see more and more demand for the BIT license and the limited purpose trust charter. As I said, we've got over 30 companies based here in New York that have our licenses, and we just see continued demand for those licenses. And I think it's a great thing. Companies and responsible actors understand that having those clear rules of the road is good for business, it's good for markets, and it's good for consumers.
Okay, that's all for today, but you can find that full interview over at cnbc.com/cryptoworld. We'll be back again tomorrow, and we will see you then.